welcome to Hung Ho and Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before buying and investing in stocks. I'm your host, Kong. And sadly, my co-host, Gibson, could not be here today. So let's take a look at what's in the news. One of the big worries, aside from China's economic instability, is that oil had actually dropped below $30 a barrel. Stratfor has a video on the winners and losers of falling oil prices. Saudi Arabia and the United Arab Emirates will get through well as they have low debts. Saudi Arabia might privatize some of their oil assets to get through. The losers, however, will be Russia because over half of their GDP is based on oil sales. Venezuela, as we had previously mentioned, is also in deep trouble and once again on the brink of declaring bankruptcy if it can't pay back its U.S. debtors. One person to win from this is Iran, as sanctions and export restrictions, especially oil exports, will be lifted. Other reasons behind the drop was China's economic instability, which people predict means lesser demand for oil in that country, while thanks to El Nino, Europe's winter has been much more mild and less energy was used for heating. One of the major debates with China is whether or not these recent stock drops will mean China's economy will go through a change from an export-based economy to a service-based economy, creating a new period of wealth and prosperity, while also possibly contributing to the world with new inventions. Sadly, the folks at the Law Warfare blog point out a couple of reasons why this won't be the case. 1. China lacks a clear system of rule of law, which they only have rule by law. Its recent militaristic ventures into the South China Seas and ever-increasing tensions with its other Asian neighbors towards the east have also been of concern. So much so that the Japanese Prime Minister and Korean President had signed a preliminary deal to put aside their historical differences, most likely because of the threat China poses with its militaristic advances. And one of the things that will also influence China's militaristic policies will be towards the island of Taiwan, because on Saturday they had their presidential elections, and Tsai Ing-wen, the party leader of the Democratic Progressive Party, a party whose platform is based on Taiwanese independence, is also in their party constitution, just to make it known. The Communist Chinese on the mainland are worried about this, because they view Taiwan as a part of China and the Republic of China, the occupying government of the island, as a last vestige that must be destroyed. What does this mean for us? If China continues to be belligerent, we may get dragged in. For those who live in Hong Kong, you're used to getting into a deal with mainland China only to get screwed. For everyone else, let this be a warning. India was one of the first nations and one of the biggest stakeholders in China's Asian Infrastructure Investment Bank, and for that, it was rewarded with a seat in it was not rewarded, I should say, with a seat in the vice presidency of the bank, giving them less control. Thanks for participating. Wal-Mart is closing 269 stores. More than half of the locations being closed are in the U.S., while others are in its Brazilian locations, which has seen a rocky economy lately. I honestly didn't even know they had locations in Brazil, but the one close to my location is still open. However, if Gibson was here, he would be sad that the one near his place is going to close. And let's take a look at the weekend review. Stock markets were actually doing good after our last episode and kept going up until Friday came along, where the proverbial Dow Jones parent dropped off the S&P and NASDAQ kids off at the pool. In other words, they all took a massive dump, and everyone went to shit. The Dow Jones was down almost 391 points, the S&P was down 41 points, and the NASDAQ lost the most percentage with 126 points. Friday's drop means it's the worst 10-day start to a year in history, according to the site MarketWatch. China pumped more funds, $15 billion, into their markets to try to increase liquidity. And there was no performance for today because the markets were closed. Happy MLK Day. Yeah, that's outdated. That was as of Monday, so let's not worry about that. Let's take a look at the portfolio and review. Intel is running into a situation where PC sales are getting lower and lower. 2/3 of their profits are from PC markets. So what's Intel to do? Well, since more and more things are headed to the cloud, Intel is trying to push towards selling their products to major data centers rather than having to just rely solely on PC sales. Let's take a look at the investing strategies. Today I don't have one specific investing strategy for you, but if you're familiar with the documentary series Frontline, they did a couple of episodes on retirement funds and 401ks, where they asked an expert on strategies for people with all sorts of different investing needs. So it's actually a bunch of investing strategies, advice wrapped up into one webpage. So choose wisely according to your situation. Let's take a look at recommendations. Earlier we had mentioned how China pumped money into markets to increase liquidity. Well, what exactly does that mean? We found a document from the Wharton School of Business. It describes traditional liquidity creation with traditional banks. But what also gets into, but it also gets into shadow banking as well. Basically, it talks about how banks use money or liquidity. First, the banks lend illiquid assets, i.e. loans to people, while allowing people to withdraw money. Now it's only illiquid because those banks can't sell that loan to someone without incurring a loss. At the same time, the banks providing you that loan have just given you liquidity. To get a better idea of liquidity, in the works on the macroeconomics and global level, you can watch this video called "Playing with Liquidity," which describes the liquidity risk nearly every country is running. Funny enough, I thought the video was a recent production, but it turns out it was actually released 3 years ago. Still very much relevant this year. That's it, folks. Thanks for listening. So, just a reminder, other positions in the stocks mentioned on this show. Don't buy stocks based solely on information from this podcast, and always do your own research before investing in stocks.